What does it mean when we say commercially interdependent for associated company purposes? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. As we've been talking about associated companies, there is a few additional rules that we need to be aware of, which includes commercial interdependence, which is not quite as straightforward as some of the other factors within associated company rules, which falls into the under common control side of things. So today we're going to have a look at a couple of examples and really have a look at some of the details of commercially interdependent businesses. So first, let's look at some of the commercial independence rules so you can get an idea of what they think of as being commercially independent. So for associated company corporation tax points of view, we now need to look at what classifies as making companies substantially commercially interdependent. And this falls into a couple of different areas. The first one we're going to look at is our financial interdependence. Now, this reflects the extent to which one company is giving financial support to another. However, the provision of a loan from a family member may cause a company to be associated under the loan credit rules, since they may be entitled to share more than half the assets of that company on a notional winding up for the purposes of corporation tax rules. The key thing we're really looking at from the financial interdependence is one organisation funding the other company? Is it generating its own income? What is the financial position between the two companies? Are they completely independent, or is there some cross links or some different things that are fitting together that would actually connect these two companies? The next one we then move on to is the economic interdependence. And this is where two companies would be economically independent. They're seeking to realise the same economic objective. The activities of one benefit the other, or they have common customers. So, for example, in a pub scenario where one business is providing the drinks, one company is providing the food in the same environment, they're serving the same customers. You don't go out for a meal without a drink. You don't necessarily go to a restaurant to get a drink without a meal. So on this basis, you'd have to say that business, those two businesses are connected. We will go into an example from a property point of view in a moment when we've just been through all of these rules to understand what the interdependent side of things fits together. Obviously, it may be you're trading with each other, and that is not a problem. The question there becomes whether there's substantial commercial interdependence from an economic point of view. So you might have some common customers, but you've also got your own customers, or the economic activities are similar, but they are specifically different as well, where you would be positioning yourselves as not being commercially interdependent, and there's definitely not a substantial point of view for it. This leads us on to our third criteria, which is our organisational independence. And this is the case where the businesses of the companies have common management or employees, common premises, common equipment. And this becomes a little more difficult at times, because if we are managing our business and it's the same people involved, it may be you're using the same computer to do the things for the different businesses which you've separated out into separate entities, but you're actually doing everything from one place, maybe at even your home address. So this is one of those where there's a little more thought that needs to go into it to see whether it does fit into the criteria that it is commercially interdependent. In terms of employees, it may be it's got yourself and a spouse maybe as the key people. Then the question would be, have you got a team of people? Are they working for one entity, or are they working for multiple entities? And again, that would start to suggest there is commercial interdependence. And the question would then lead us to, is it substantial? Moving on to what is the impact? Well, first we ought to start with the word substantial, as it's quite a key point in this substantial commercial interdependence. If it's not a substantial commercial interdependence, then there's no impact whatsoever. However, if it is classified as being a substantial commercial interdependence, then your associated rules kick in. So let's just go into what substantial means. And unfortunately, it's not actually defined within the regulations. HMRC consider that both the degree of independence and the period which it exists during a particular corporation tax period need to be taken into account. So this is very much a judgment call. There is no specific test at this point, so it's very much whenever there is this sort of scenario where there may be commercial independence, you probably just need to make sure, or your accountant will need to make sure, that this is just documented to explain why it is or why it isn't, so that if they do come back and query things, that you have your notes of, well, we made the determination that it wasn't or it was based on this, and it's probably more likely going to be why it wasn't at the point, to ensure that you are not going to be falling into the associated company rules. If you do fall within the associated company rules, that means that you are going to have an associated company. It means that the tax thresholds of 50,000 and 250,000 are going to be divided by the number of associated companies. So if, for example, you have 2 associated companies, the 50,000 will reduce down to 25,000, the 250 will reduce down to the 125, which means that you're going to be paying higher rates of corporation tax at an earlier point. So ideally you want to be minimising the associated company position, and it's a matter of managing this position to make sure that you're not falling foul of these rules and you're not trying to actively avoid them, but you're structuring things in the right way to make your companies work for you and minimise, where possible, any tax liabilities. A final thought before we jump into a couple of examples is very much, many feel that HMRC glossed over the fact of interdependence, and it's probably just a point we should raise here, that where we say interdependence, it's not necessary that each company must be dependent in some way or another. Is it dependency from one point of view, so one is dependent on the other but the other isn't dependent, or whether it's both ways, so both companies are dependent on the other. And again, in this area we have no specific feedback or guidance, we are just waiting on court cases to give us direction on the specifics. But as I say, the key thing in this area is going to be documentation of the reasons why it's been determined that they are not associated when that is the case. Now we understand what commercially interdependent means. Now let's jump into a couple of examples so we can really just test that theory to see how it actually fits in practice, to give us an idea of ones that will be treated as associated. So hopefully you can get an idea of some scenarios that you may be in, whether or not that would fit the bill. So let's jump into some examples. Let us move on to example 1 then, where we have company A, B, C and D all owned by a variety of different family members. And the first question we would normally ask for an associated company point is there one single controlling person, before we move on to a minimum controlling combination question. So if we look at these, firstly we've got Mr. Bloggs as the controlling person. Secondly, we have Mr. Bloggs in company B. And in company C and D, we've got 50%, 50% and 50%, 50%, which means that we don't have any specific controlling party. So on this example, when we look at it from a simple point, we would then be going, okay, we've got company A is associated to company B, and company A would have one or two associated companies for all the ones that they are, and company B would also have 2 associated companies. Company C, company D both would have no associated companies if we are simply looking at the single controlling person, or we're looking at minimum controlling combinations. However, there is another rule which our video is focusing on today, which is all to do with substantial commercial independence. And on each different one, we need to also have a look to see if there is any substantial commercial interdependence. Now, in our example with company A, B, C, D, we are actually going to be saying that company C is a letting agency. Now, because we've got a letting agency, the question is, what is that letting agency doing and who is it letting properties to? So we now know we've got company C as a letting agency, but actually company B is the investment company, and this one owns all the investment property. When we look in more detail and actually ask those questions, what we find is that all of the letting agency's properties are actually the investment property company's properties. And all of the investment property company's properties are let out by company C. So although company B and C are not associated for controlling persons, we now need to look at a secondary point in the associated company rules, which is what's known as an attribution of rights for our associates. Now, what this means is any one of our individuals who is associated to another, and I'm going to describe them as the airplane rules because anyone who's been on an aircraft will know that their arms go forward, their arms go back, and their arms go to the side when they are telling you where the exits are. And what this means is, for the attribution of rights rules, we now need to look at, is there any children, is there any siblings, and is there any parents, and is there any spouses? If there is any of these people, then those rights will be attributed to the other person who is the shareholder. So in our example here, instead of Mrs. Bloggs and Mr. Bloggs having 50% each, based on the fact that we're looking at Mr. Bloggs will actually be attributed 100% of the shares in company C, which now means company C is now associated with company B. So this now changes things in our associated company position, because as well as company B being associated now, there's the potential that company A, so the question mark over company A, whether it's got 2 or 3 associated companies, and I'm not going to dive into that any further today to overcomplicate the scenario. Company B definitely has 3 associated companies now. Company C has 2 or 3, it's definitely 2. We would need to see what the position is in regards to company A and C. If there is no commercial substantial, and that's the key word, substantial, commercial interdependence between C and A, then that potentially would mean that there is no association between those two. If there is, again, we are bringing things back into play. And company D is still no associated companies. So as you can see, from being in one position, we've now actually changed the whole scenario to find that we've got more associated companies than we thought we had, because there is substantial commercial interdependence. Now this one, you might say, is because of all of their income being derived from company B, and much of their expenses for company B being derived from company C, which there is this attribution of rights, which means that Mr. Bloggs is taking all of the ownership of shares for corporation tax associated company rules. There's no change in shareholdings, there's no change in any legal format, it is just this attribution of rights that for tax purposes he is deemed to own 100%, which is why this now comes into play as part of the tax rules. As you can see, things get more complicated with this side of things, but hopefully that gives you an idea of our first example. Let us look at scenario number 2, which we're going to simplify things a little bit further. And in this one, we've again got our lettings agency and our investment company. And we're going to look at whether or not there is anything that is interlinked. So from a control point of view, our initial position on this is Mr. Bloggs has 100% of the shares in this company. So on that basis, we would have him as the controlling party there. And there would be in company A 2 people who would need to be in control to get actual overall control. So you'd need either Mrs. Bloggs and Miss Bloggs, or Mrs. Bloggs and Mr. Bloggs to give us 75%. And we've got the Mrs. Mr. combination, and we've got the Miss and Mrs. combination. So we've got 2 combinations there that we would need to play with. And based on that, from our single controlling person down to our minimum controlling combination group of people, check out the separate videos on them to understand that side of things in more detail. We're now going to bring into play the fact that neither of those are now associated until we potentially bring in our substantial commercial interdependence. Now, our substantial interdependence kicks in with the letting agency being the person that does all the lettings for the investment company's properties. And all the properties in the investment company are let out by company B. So there is a very strong commercial interdependence here, because if that is the only client, then we're now looking at being substantial commercial interdependence. So in that scenario, that would mean that company A would have 2 associated companies, and company B would also have 2 associated companies. Now, the reason for this is because of something called, as we've just said on the previous example, the attribution of rights. And in essence, Mr. Bloggs will take his wife's ownership of the shares. So as well as his 25%, we have got her 50%. And in actual fact, because Miss Bloggs is his daughter, we would also have potentially the 25%. So Mr. Bloggs on the attribution of rights adjustment potentially could have up to 100% of the shares. So on that basis, we've got 100% in company A, 100% in company B, which is why we've got this associated companies position. So your question to me may be on the route of, well, how do we actually stop that happening? And in some ways, the key thing here is to stop the associated company position, we need to stop the substantial commercial interdependence. And this independence is from both points of view. But if we suddenly said the only customer is company A, and we said, well, no, he has actually a book of clients, and from company A we have income of, let's go 10k and 20 properties, but from other properties or other organisations that he's working with, we've actually got 100k of income from another, let's go 70 properties. These are just guesstimates, so please bear with me. So in essence, of his actual whole business, we've only actually got 9% of his business relates to his other company. Now, this is where we need to ask the question, is that substantial commercial interdependence? So from that point of view, we'd probably say, no, there's probably not sufficient commercial economic point of view. So then you'd look, is it trading from the same place? Are the same employees working in it? And you'd look at the whole picture to see, is there anything from a financial point of view, an economic point of view, or an organisational point of view that is going to make them substantially commercially interdependent, which Initially, we had said yes if that is the only customer and you're setting up this letting agency just to manage your own properties. If, however, it's a no, then potentially they will still be not associated based on the shareholdings, because we're not going to come into play with this attribution of rights, which if the answer is no, these are irrelevant. So on that basis, we don't need to deal with that side of things. As you can see, there's a lot of debate on what is and what isn't, and this is all going to be about justification and documenting this justification on each of the different companies depending what they are doing. If they're in a group, they will still be definitely connected. However, where they are independent entities, this question mark will need to be asked and answered to just check that there is no issues from that point of view. Hopefully today you've discovered exactly what commercially interdependent means and whether your companies are going to be affected by this quirk in the associated company tax rules. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.